in a broader picture, right, we have this news. We also had Iran reportedly overnight sort of seizing a ship in international waters. And I wanted to get your understanding of where we are with the stability or instability in the region.
Well, I think in terms of looking at the longer term outlook, when we think about the need for supplies coming out of the Middle East, particularly given what's going on in the U.S. shale patch and non-OPEC supply, the Middle East supplies are more important to future supply security than, I would argue, any time in the last 20 to 30 years. So stability in the region, I think, is going to be critical in terms of the outlook going forward. But I think, when we look at, this peace between UAE and Israel, I think it's just a broader reflection of the core Gulf states like Saudi Arabia, UAE coming closer to Israel, particularly given the recent dynamics with Iran. And I think the events last night highlight that those tensions. But I think the question is what happens post-election come this November. What are the odds of seeing a deal between U.S. and Iran? Does that happen? In no way do we think it's going to happen overnight. But I think what it indicates is just the importance of the region, the need for stability, particularly given the need for those supplies coming online in the future.
Let's broaden out the discussion. The IEA discussing the outlook a little earlier on, talking about the fact that we're seeing gasoline coming back. I think we can all appreciate that. I was talking to Robin Hayes, who runs JetBlue, a little bit earlier on. His demand outlook doesn't look particularly good right now, as the other airlines are saying the same thing. The IEA is indicating that jet fuel is likely to remain in a really difficult place for quite some time. Can we see a proper recovery in the oil price until basically we all get back on an airplane?
Yes. I think the key point is this market is in a global deficit right now. If we use demand numbers relative to pre-crisis levels, demand's down roughly around 10 million barrels per day versus a trough of 22, 23 million barrels per day. So you've got more than half of it back. And as you indicated, most of that return in demand is gasoline. In fact, I'm in Europe right now. The return in gasoline demand in Europe and Asia, because of the predominance of public transportation, has been significant. But I think the key to getting the jet fuel demand back will need to be a vaccine. And that's not, in the most optimistic cases, first quarter of 2021. So I think in terms of looking at our normalization in oil prices and inventories, we still think it's going to happen first quarter of 2021 before you get the vaccine at least distributed. We think, a vaccine could be announced as early as November, but distributed in first quarter. I think in terms of getting that jet fuel demand back, you do need to get past that vaccine.
How bumpy is it going to be until then? I mean, time spreads were much stronger earlier because China was in there buying. Now it seems like the hurdle for them to buy is much higher. At the same time, refiners' margins, as we're talking about, products are getting just really hammered. What kind of bumpiness do we have to look for in the next 12 months?
Well, I mean, the market is caught in this tug of war between a weak dollar putting upward pressure on oil and commodity prices. And in oil, at least, you have weak fundamentals, and it's getting pushed back and forth. Our base case is this market just trades sideways with choppy volatility between now and the end of this year. Once you normalize inventories, we can move up towards $50 a barrel. But I think, and I'm talking Brent basis here, I think, in terms of thinking about that recovery in demand, the low-hanging fruit is behind us. It's going to be a slow slog. We think maybe you can get back 1 million barrels per day each month between now and the end of this year, and you'll still be down around 5 million barrels per day by the end of this year. So, in terms of thinking about, the volatility, the fundamentals, I think, as you point, would suggest downside risk, but the weakness in the dollar, brings us into the gold view, really starts to, put more upward pressure, and you're kind of caught between that tug of war right now.
When we get a vaccine, do we get inflation? Because presumably demand is going to pick up quite strongly in an environment where we have huge fiscal supply and huge monetary supply. Do you think that's going to happen? And if it does happen, what do I buy in the commodity space to hedge my risk?
Well, it's unlikely going to happen tomorrow or within the next year. And when you start to look at 18 months and beyond, particularly you look at our oil price target at the end of next year is $65 a barrel. Given where the price levels have been recently, that's a substantial increase from here, and it could easily get up into the $70 a barrel level, given the need to bring on new supply. Now, in terms of thinking about, what is the best hedge for inflation. I like to point out gold is a great debasement hedge. You can think about what we're going through right now as a debt accumulation. In this environment, gold is the best hedge against that debt accumulation that essentially is kind of a debasing dynamic against the currency. I like to point out, where does the word debasing come from? It comes from adding base metals into precious metals. So owning gold as a hedge against debasement will be the best hedge. Now, when we transition into the recovery in the economy, as you talk about, oil and cyclical commodities like metals are much better hedges against inflation. When you actually, now debasement doesn't necessarily need to equal inflation as we saw in the 2000s. However, when we get to that environment, normalization and growth, oil and commodities